The markets are in turmoil. The Dow Jones Industrial Average experienced a historic plunge, plummeting over 2,200 points. This dramatic drop reflects growing anxieties over the escalating trade war between the United States and China. Investors are grappling with uncertainty as new tariffs threaten to destabilize the global economy. The market's nosedive is a clear sign of the widespread fear gripping investors. The escalating trade war has introduced a level of uncertainty that is shaking the foundations of the global economy. Businesses and consumers alike are bracing for the impact of higher prices and potential disruptions to supply chains. The situation is being closely watched by economists and policymakers around the world. Many are urging both sides to return to the negotiating table. Failure to find a resolution could have far-reaching consequences, impacting economic growth and potentially leading to a global recession. This dramatic market plunge serves as a stark reminder of the interconnectedness of the global economy. The trade war's ripple effects are being felt across industries and continents, underscoring the importance of finding a swift and amicable resolution. The seeds of this market turmoil were sown by a series of escalating tariffs between the United States and China. Earlier this year, the Trump administration imposed a 10% tariff on a wide range of Chinese goods. This was followed by a doubling of that tariff to 20% in March. In April, the United States further escalated tensions by raising tariffs on Chinese goods to a staggering 54%. This aggressive move was met with swift retaliation from China. The Chinese government announced retaliatory tariffs of 34% on all U.S. goods, effective immediately. This tit-for-tat exchange of tariffs has created a climate of uncertainty and fear in the global marketplace. Businesses are now faced with the prospect of significantly higher costs, which threaten to eat into profits and disrupt supply chains. The trade war has also put consumers on edge as the prices of everyday goods are expected to rise. This uncertainty is fueling market volatility and raising concerns about a potential global recession. The Dow Jones Industrial Average's dramatic plunge was not an isolated event. Other major market indices also suffered significant losses, painting a bleak picture of investor sentiment. The S&P 500, a broader measure of the U.S. stock market, tumbled by nearly 6%, wiping out trillions of dollars in value in just 2 days. The tech-heavy Nasdaq Composite Index, already reeling from recent losses, plunged by over 5%, officially entering bear market territory. This marks the first time the Nasdaq has entered a bear market since 2022, signaling a significant shift in investor sentiment towards the tech sector. Smaller companies were not spared from the carnage. The Russell 2000 Index, which tracks the performance of small-cap stocks, also entered bear market territory, highlighting the widespread impact of the trade war fears. This synchronized decline across major market indices underscores the depth of investor concern. The trade war's potential to disrupt global growth is weighing heavily on market sentiment, leading to a broad-based sell-off across all sectors. Section 4. Recession on the horizon? Experts sound the alarm. The escalating trade war and the resulting market turmoil have fueled fears of a global recession. Experts are warning that the tariffs, if not quickly resolved, could have a significant impact on economic growth both in the United States and around the world. J.P. Morgan, a leading global financial institution, has increased its probability of a U.S. and global recession to 60% in the wake of China's retaliatory tariffs. The firm's analysts cite the trade war as a primary factor contributing to the heightened risk of an economic downturn. Other experts echo these concerns, pointing to the potential for the trade war to disrupt global supply chains, increase business costs, and dampen consumer spending. The International Monetary Fund has also downgraded its global growth forecast for 2025, citing trade tensions as a key risk factor. The growing chorus of warnings from economists and financial institutions underscores the seriousness of the situation. The trade war's potential to tip the global economy into recession is a very real threat, and one that policymakers must address with urgency. Section 5. Investors seek shelter. Flight to safety grips markets. Amidst the market turmoil and recession fears, investors are exhibiting classic flight to safety behavior. This is characterized by a shift away from riskier assets, such as stocks, and towards safer havens, such as government bonds and gold. The VIX Volatility Index, often referred to as the market's fear gauge, has spiked by 50%, indicating extreme levels of investor anxiety. This surge in volatility reflects the heightened uncertainty surrounding the trade war and its potential impact on the global economy. Demand for U.S. government bonds has surged, pushing yields on the benchmark 10-year Treasury note below 4%. This decline in bond yields is a clear indication that investors are seeking safety and stability in the face of market turbulence. Gold, another traditional safe haven asset, has also experienced a surge in demand, with prices soaring above $3,130 per ounce. This flight to safety is a clear indication of the level of fear and uncertainty gripping investors as the trade war escalates.